Governor, good to have you with us. Take us through the thinking behind today's decision.
Yes, and of course, today's decision to ease monetary policy by about 50 basis points and also moving to what we call single policy rate is mainly based on the decision by the Monetary Policy Board looking at the current inflation versus future projection as well as the economic recovery in the next 12 to 18 months. If you look at current inflation, is in fact the deflation situation mainly because of some of the administrative price changes of reduction of electricity tariff and fuel prices. This is why inflation became a deflation situation last couple of months and is going to be continuously next couple of quarters. We will see negative inflation in Sri Lanka. This is, of course, after long, very peak inflation of 70% we had in 2022. I don't mind having a period of deflation, but in our projections, we will move into our inflation target of 5% in about 12 months' time. So in that basis, we saw some space for us to reduce our policy rate, ease monetary policy stance to support the recovery of the growth and also target inflation in the range that we think the appropriate rate
Right.
under inflation targeting regime.
You talked about the single policy rate. I mean, there's still a lack of clarity on the structure. Could you talk to us about the structure?
The structure, if you can remember earlier, we had dual policy rate, which we announced SLFR, lending facility and deposit facility for interbank. But instead of announcing two policy rates, we move into a single policy rate, which is what we call overnight policy rate, where we want to target short-term call money market rate within the interbank market towards the single policy rate, which is now around 8%, which was earlier, before today, it was around 8.5%. So it's effectively easing here, which gives much more important effective signaling and also much more effective monetary policy transmission, because we are now talking about the single policy rate instead of two policy rate, which will much more clearer signal to the markets, which will improve effectiveness of monetary policy transmission, as well as which will improve signaling of monetary policy stance of central bank to the markets. It's much more clearer, much more established, and improvement in the monetary policy framework.
How much more room do you have for further policy easing?
When you look at our inflation target, 5% medium to long term, and current policy is around 8%, we can see clearly real interest rates in terms of policy rate about around 3%, even forward-looking basis. If we see if the economy is going to be growing much faster than the output gap, closing the output gap, and also inflation is going to be moving around where we target. I think we have a sufficient balanced monetary policy now. Going forward, obviously, it will be based on the forward-looking and also the evidence-based monetary policy decision, which will be in January. At that point, we will assess our outlook at that point. I think, in my view, we are in the right balance right now. Next decision will be based on how we see the next inflation. In my view, we are confident that we should be able to maintain inflation around the mid-single digit 5% without much effort going forward. I think next decision will be based on how we see at that point. Right now, we don't see a significant risk in reaching the inflation target in 12 to 18 months.
Right. Is there a sense that the Trump administration, Trump 2.0, may just complicate your policy trajectory? People are talking about how his policies are inflationary, and even the Fed is wanting to wait before making its moves. It wants to see what the policies really are. Is that complicating your own policy trajectory?
When you look at Sri Lanka's monetary policy implementation, in fact, our monetary policy decisions are predominantly based on domestic economy, because Sri Lanka economy right now not so much exposed to global capital flows and global interest rates, because our capital account is not fully open, and also we had not much of short-term inflows and outflows to Sri Lankan capital markets where in response to global interest rate changes or any global changes. So we don't expect a significant impact in terms of delay in interest rate reduction by the Fed, or there could be some impact in terms of Trump's trade policy. There could be trade diversion from some of the markets to other markets. That's where US is an important market for exports, and also EU is an important market for exports. There could be some impact on the trade flows, but in terms of financial flows, we don't expect a significant impact. That's why we think our monetary policy decision making will have no major significant impact in making monetary policy in Sri Lanka, because we are not so much exposed to global financial markets.
But even so, a lot of emerging markets are concerned about dollar exceptionalism. We've seen how the strong dollar is impacting emerging markets, especially in this part of the world.
That's correct. But if you look at Sri Lanka's situation, what we are now facing a situation where rupee is appreciating against the dollar continuously. For example, this year almost 11% appreciation against the dollar, compared to a lot of other emerging market countries have depreciated against the dollar. It's a unique situation that we are facing because of the more investor confidence, and also moving into important policies like debt restructuring, the staff level agreement, and also other domestic policies are helping improve the confidence. As a result, we are seeing in the last 2 years, after significant depreciation in 2022, continuous appreciation against the dollar. This is from our point of view, we don't see a significant impact. I think, in fact, our pressure is now preventing a sharp appreciation of the Sri Lankan rupee against the dollar that we are seeing 290 came from 370 some time ago, about 1.5 years ago. So we going forward, and also at the same time, we have been building up our external positions, resource, significantly from the position where we were during the crisis. So we continue to build up our resource, and we use that opportunity to build our resource, and also we can maintain exchange rate around certain stability while allowing market to play the role in determining exchange rate in demand and supply situation.
Governor, how are you assessing the potential for growth in Sri Lanka on the back of Sri Lanka signing the agreement with the IMF at the staff level? Will that be a game changer for growth?
In fact, if you look at, there are three important things happened recently. First one, the political stability. After two presidential election and the parliament election, now we have a strong, stable political system that certainly will help to stabilize the political situation. Secondly, the reaching staff level agreement with the IMF to complete the third review, that's also an important signal. Thirdly, the announcement of launch of ISB, Intra-Sovereign Bond Exchange, which was launched yesterday, which also we are hoping to complete within a very short period. Those are three important developments that has happened already in the Sri Lankan economy going forward. And in addition, today, monetary policy decision will also provide additional boost for the economic recovery and maintain inflation. So these four factors will certainly provide much more confidence, and we hope that continuous recovery of the economy will continue towards next year as well. As we are seeing so far, 4 quarters of positive growth will continue at the same trend in the next year as well.
There is another important development. We know that Sri Lankan president has pulled back on IMF pledges. He says he's unsure if that agreement is going to be beneficial for the country. How are you looking at that?
No, but if you look at the latest statements by the government and also the statement by the president soon after he was elected, he gave the assurance that he will continue with the program with the IMF. That was the first announcement he made 2 days after he was elected. And then after the parliament election, soon after the election, IMF mission was here, and government, especially the president, as a finance minister, agreed to maintain the commitments that we have already had with the IMF. And as a result, government was able to reach staff level agreement. So that gives a signal that current government, the president, under his presidency, will continue to maintain commitments under the staff level agreement, and that program will go ahead. I don't think there's any concern or doubt about the IMF program that will continue. That IMF president and the government has given assurance under the latest staff level agreement.
Governor, how would you describe the relationship between the central bank and the president? How much stability is there?
If you look at the central bank after the new Central Bank Act, which was enacted and passed by the parliament in 2023, which became effective from September last year, Now, central bank is an independent entity. We have much more monetary policy independence
Right.
as well as accountability. So, under which, irrespective of the administration, central bank can operate independently in implementing our mandate of price stability and also maintain financial stability. I don't see any problem with central bank independence and central bank ability to deliver its mandate independently under the new Central Bank Act, which is the law of the country now.